Good evening, everyone. My name is Maurya Hanspal, and in this session, we're going to continue our discussion on the topic of capital structure. So, in the previous session, we talked about capital structure, that what exactly is the capital structure of the organization. And to start before, this session has been termed as capital structure number 3, which clearly states that we have already completed the topics of capital structure 1 and capital structure 2 in the previous sessions. And those sessions are available on the YT sessions, okay, on the YT log page. Those previous sessions are available for all of you. So if anyone has any doubts in the previous 2 sessions, so people can recall and ask me. So there is no problem in that. So what do we talked about in the previous sessions on capital structure? So we talked about what exactly is the capital structure of a company, what is equity, debt, and preference shares, what can be the other modes of finance through which the company can raise money. So all these sources we tried to talk about. Then we also talked about how to calculate the cost of debt, how to calculate the cost of equity, especially using the most important model and the most widely used model, that is the CAPM model, the capital asset pricing model. So what did CAPM model tell us? CAPM model, to repeat it once again, which we have already done in the previous session of capital structure 2. We talked about the CAPM model in detail, and we also talked about the assumptions of the CAPM model. So to talk in brief, the CAPM model talks about establishing an equilibrium relationship between the cost of equity and the systematic risk, which is also called the non-diversifiable risk or the market risk, which cannot be diversified by the usual strategies that the company use in place. And we use beta as a proxy of systematic risk, specifically in the CAPM model. There are other formulas, other models as well, like when we talk about the Sharpe's optimizations models and single index models. So purposely for that, we are not talking in this session. We talked about the CAPM model. Then we also talked about the risk-free rate, the market risk premium, and also we also talked about the different types of betas, be it your aggressive betas, your market betas, or defensive betas. So different kinds of betas we tried to discuss. Also, we talked about the differences between the systematic risk or the non-diversifiable risk, जो एक ही बात है, and we compared this with the non-systematic risk or diversifiable risk, which is also called company specific risk or unique risk or relevant risk. Okay, we also call it as the relevant risk, we also call it as unique risk, and we also call it as the company specific risk, which is diversifiable, which is non-systematic. So these terms are one and the same thing. Then we also try to understand the graphical representation of CAPM model through the security market line. And we made a graph like this. Here we had our beta, which is a measure of systematic risk or non-diversifiable risk. And here on the y-axis, we had the expected return. And this basically was our SML line, the security market line. And security market line is no different from the CAPM model. People call CAPM model as different from the SML, but security market line is same as the CAPM model. CAPM model is more in nature of a theoretical concept. You talk about the formulas, you solve the questions, put in values, talk about the assumptions. But when you talk about the security market line, it is a graphical representation of CAPM. If you want to represent CAPM in the form of a graphical representation on pen and paper, whiteboard, Excel, or anywhere you wish to do it, that's an SML model. That's a security market line. We're trying to derive a graphical representation from the CAPM model in the form of an SML. Okay. And we further talked about the securities above the SML are undervalued and the securities below the SML are overvalued. And this we try to understand. Right. So in this session, we're going to talk about some of the major concepts also further in this theory of CAPM and all. Okay. So make sure of one thing, in this SML line, we tend to take into consideration beta or the systematic risk or the market risk or the non-diversifiable risk. It is one and the same thing. And the expected return. But further, you also need to know the concepts of the CML line. CML. How is SML different from CML? CML is the security market line. SML is the security market line. SML. S stands for security, M stands for market, and L stands for line. CML is the capital market line. C stands for capital, M stands for market, and L stands for line. CML is the capital market line. There is a thin line difference between the SML and CML, but when we try to understand the market in detail and try to understand some more terminologies, and when we are more interested in creating our portfolio in a better way, and further we want to allocate our securities, how much we want to put it into the risk-free securities in the form of the government security bills, notes, or bonds, and how much we want to put in terms of the concept of risky assets or the market linked assets. So in that purpose, if we want to better understand the market in creation of the portfolio or segregation of these securities, in that case CML comes into consideration, because CML takes into consideration the whole risk that is available, whereas the SML, it just talked about the systematic risk or the non-diversifiable risk. But CML is taking into consideration the total risk, which is obviously denoted by standard deviation, which we have already talked about in the previous session. The standard deviation represents the total risk which a security can face or a company can face. Okay. So this session can be a bit smaller for all of you, because in this session we'll just wind up with this topic. Okay. So let's go to the CML. So what happens in case of CML? This expected return, it tends to be same in the y-axis. In the x-axis, you are taking the standard deviation, okay, which is your total risk you are taking. And total risk means both the systematic risk and the non-systematic risk. Both the diversifiable risk and the non-diversifiable risk you are taking total में. सारे risk इसमें आ गए. Total risk है तुम्हारा ये. ठीक है? So before understanding the concept of the CML, let's talk about a term for which a large number of people are confused about. उनको समझ नहीं आता वो है क्या. And CML को समझने से पहले you need to understand that thing, which is a C-shaped curve. I'll draw it in a much better way. Okay. You have something like this. And this is called as efficient frontier. And I'll talk about kya hota hai efficient frontier. So don't worry about that. We are talking about the efficient frontier. So this shape or the C-shaped curve that you are seeing is the efficient frontier. Okay, so what exactly is the efficient frontier? So this efficient frontier, as the name suggests, कुछ ऐसी चीज है which is efficient, and something that is efficient, that is good to go with. If a portfolio is efficient, if the market is efficient, if the stocks are efficient, we will try to buy those stocks because they are efficient. Efficient terms से पता चल जाता है बात अच्छी है किसी चीज में. Okay. So this curve, it represents various kinds of portfolios. बहुत सारे portfolios हैं इस curve में. यहाँ पर, यहाँ पर, यहाँ पर, यहाँ पर, यहाँ पर, यहाँ पर. And as such को predefined number नहीं है कि कितने portfolios हैं. Infinite portfolios are available on this efficient portfolio, right? And if you are buying those portfolios, बहुत सारे portfolios हो सकते हैं, A, B, C, D, E, hundred, thousands, lakhs में हो सकते हैं portfolios, infinite. And all those portfolios which lie on this efficient frontier are the efficient ones, matlab are the good ones. You can think of buying these portfolios. Because what these portfolios are doing, they're giving you higher expected return. Higher expected return for the same level of risk. Or same level of expected return for a lower amount of risk. ये दो सिनारियोज हैं. जो भी सारे पोर्टफोलियोज यहाँ पे होंगे इस एफिशिएंट फ्रंटियर पर होने चाहिए. Either they will give you a higher expected return for the same level of risk that you are taking. मतलब ना तो तुम ज्यादा रिस्क ले रहे हो ना तुम कम ले रहे हो. जितना तुम पहले से तुम रिस्क लेते आ रहे थे उतना ही रिस्क ले रहे हो. एक एवरेज मॉडरेट तुम रिस्क ले रहे हो. and you are getting a higher return for that. It's a good condition. Ideally people say higher the risk, higher the expected return. But यहाँ पे तुम एक normal risk ले रहे हो and still you are getting a higher rate of return. But the other scenario is you are getting a same expected return. ना तुमको ज्यादा रिटर्न मिल रहा है ना कम मिल रहा है, जितना पहले से मिलता आ रहा था एक उतना ही रिटर्न मिल रहा है, बट रिस्क बहुत ही कम है एंड वो रिस्क फ्री सिक्योरिटीज भी नहीं है. एटलीस्ट यू आर गेटिंग अ रिटर्न मोर देन द रिस्क फ्री सिक्योरिटीज. मतलब एक आइडल रिटर्न मिल रहा है, अच्छा रिटर्न मिल रहा है, बहुत ही अच्छा नहीं, बट यू आर टेंड ऑफ सेटिस्फाइड विद दैट. बट उसके लिए तुम रिस्क बहुत ही कम ले रहे हो. हाँ, तो बात ये भी अच्छी है, राइट? सो इधर दीज टू सिनारियोज कैन बी देयर. And these two scenarios would only be there when your portfolio is on this C curve. C curve के ऊपर होना चाहिए. अगर C curve के नीचे portfolio है, it is the inefficient one. घटिया portfolio है, भूल जाओ, जाना ही नहीं है, आग बंद. ना किसी और को मतलब कि like you have to say okay like you buy these portfolios. People think अगर efficient frontier के नीचे portfolio है, it is a cheap portfolio. सस्ता है तो खरीद लो. Because market works on the principle कि buy something when something is undervalued and sell when something is overvalued. But in real life, this principle does not work always. Ideally, what people do, they tend to buy companies at higher price only and they want to sell it at higher price only. सस्ता खरीदो and महंगा बेचो. अब ये आइडियोलॉजी हर केस में स्टैंड नहीं करती. No one can wait for the company like TCS, which is trading at 3,800 to come down at 1,000 or 1,500 and then they'll buy it. जिसको मार्केट में TCS खरीदनी है, they have to buy that share for 3,800 and sell it when it goes to 6,000 or like 7,000 in future. So what the market is currently working right now, it is buy high and sell high. That's it. Okay. So also like there can be some portfolios which are above this efficient frontier. ठीक है. Again, these portfolios can be unattainable because efficient is something like which is best. इससे ज्यादा कुछ बेहतर कुछ हो ही नहीं सकता. ठीक है, तो मान के चलो everything should be there on the efficient frontier. Okay, again, all the people who are watching my live IT live sessions on the college Dekho, they know that I have been talking about the concept of behavioral finance or financial psychologies, and also talked about this in terms of the utility curves. Everyone can have a different curve of utility. Similarly, efficient frontier can be different for anyone. हो सकता है like किसी का like efficient frontier यहाँ पे हो, किसी का यहाँ पे हो. It is possible because every person would have a different risk appetite, a different expected return and different amount of risk. So that is something different. ओके, बट अभी के लिए हम यहां लेके चलते हैं बीच में. दैट इज द एफिशिएंट फ्रंटियर. अब यहां पे तुम्हारी एक ऐसे लाइन जाएगी, इसको कट करते हुए एट अ मिड पॉइंट. दिस लाइन इज नथिंग बट योर कैपिटल एलोकेशन लाइन. कैपिटल एलोकेशन लाइन. दिस लाइन इज नथिंग बट योर कैपिटल एलोकेशन लाइन. इट इज ऑलमोस्ट सेम एज द CML line. कैपिटल एलोकेशन लाइन is a part of the CML line, but almost same होते हैं. ठीक है. At this part, let's divide this midpoint into two. At this part, this is the lending portfolio, and इसके आगे वाला part, like ये सारा part, this part is the borrowing portfolio. ठीक है. इस midpoint से left में it is the lending portfolio and it is the borrowing portfolio. So in the lending portfolio, we assume that we are investing in the risk-free assets. मतलब गवर्नमेंट सिक्योरिटीज में, बॉन्ड्स में, T-bills में, जहां पर रिस्क बहुत ही कम है. ठीक है. बट इन द बोरोइंग पोर्टफोलियो वी assume that we are investing in the risky assets और द मार्केट के assets जहां पे रिस्क है, जिनका जो रिटर्न है वो मार्केट की मतलब की market, how the market performs. It is basically based on the performance of market. So left hand side पे lending portfolio includes all the risk free rates assets, and right hand side में you have the borrowing portfolio जहां पे risky assets होते हैं. And जो mid point है यहाँ पे जो like bifurcate कर रहा है, this point is called the market portfolio, and it is also called what? The tangency portfolio. Tangency portfolio is nothing but at the point where your capital allocation line, yes, CML line, intersects the efficient frontier, ये midpoint. It is the market portfolio. And market portfolio is a combination of all the risky assets. Risky assets ही होते हैं इसमें बस, और कुछ नहीं होता. But एक optimal combination होता है of risky assets. And that risky asset is in the proportion of, मान लो अगर like Reliance की weightage in terms of risk अगर मार्केट में 20% है, तो तुम्हारे पोर्टफोलियो में तुम लाइक रिलायंस के शेयर को तुम लाइक 20% ही रखोगे, तुम चेंज नहीं करोगे. तो दैट इज द मार्केट पोर्टफोलियो. सो अगर कोई तुमसे पूछे आगे जाके कि व्हाट इज द CAL लाइन और द कैपिटल मार्केट लाइन, कैपिटल एलोकेशन लाइन, इट शोज यू द वेरियस कॉम्बिनेशंस ऑफ पोर्टफोलियोज, जहां पे यू हैव द कॉम्बिनेशन ऑफ द रिस्क फ्री एसेट्स एज वेल एज द मार्केट पोर्टफोलियो. एक ऐसी लाइन जहां पे you get various combinations of the risk-free assets and the market portfolios. So that is the capital allocation line which you need to understand. Okay. इसको हम CML line and this CAL line, it can be different for different people. किसी की CAL line like ऊपर हो सकती है. So there can be like different combinations of CAL line. Okay. So that is one thing you need to understand. So that is the one thing which we tried to talk in this session about the CML line and all these things. Okay. So these things must be clear in your mind, that what is the difference between the SML and CML specifically, and specifically the lending portfolio, the borrowing portfolio, and the market portfolio, which is also called the tendency portfolio. Okay. So this is one thing I wanted to complete in this session, like regarding the basics of this portfolio. Okay. So see you in the next session.